How long can the economic boom last? A new Deloitte survey finds that less than half of chief financial officers expect better economic conditions in a year, and that's the lowest recorded in 8 quarters. Joining us now with much more on these findings, a first on Fox Business interview, Deloitte's Global CFO program leader, Sandy Cockrell. Sandy, good to see you.
Dagan, great to see you.
How do you read into, let's start with that statistic. How do you read into that? What does that tell you about the road ahead?
Well, first of all, it's really important. The second quarter had some of the highest survey recordings we've ever seen. So we're coming down some very high metrics. And if you look at the U.S. economy, the North American economy, 9 out of 10 CFOs still say it's at least good. So that's pretty positive. One of the statistics that just jumped out of us, it's, I think, actually positive again, dividend growth. 7.4% forecasted dividend growth over the next year. That is a survey record. It's off the charts. So especially in retail, wholesale, and energy and resources stocks. So those investors are sitting pretty good right now.
So, Sandy, 2 things. One, are these public companies, CFOs?
Yes. Yeah,
public CFOs?
130 some CFOs participated this quarter. We've done this for 8 years. Most all these are from public multinational companies with billion dollars of sales.
Okay. And just historically, are they a good indicator? Or, because sometimes you'll see people results like this come in as contrarian indicators or good. Historically, they've been good at predicting.
Yes. Yeah, all the metrics, we follow a number of metrics: revenue growth, earnings growth, capital expenditures, hiring growth, and those metrics really do kind of follow other economic indices in a pretty good way. Yeah.
And are they these companies have a large international component? Do they make a distinction between what they see in Europe and Asia versus the U.S.?
Yes.
And do they see the U.S. as being good and the rest of the world being bad, or do they think the U.S. is in trouble?
Steve, what we saw this quarter is still a huge amount of optimism for the North American economy. For the Chinese economy and the European economy, they slid. If you look at China, so only 32% of the CFOs said the Chinese economy is good today, 55% last quarter. So huge dramatic shift. You got to wonder if CFOs are worried about the trade wars and tariffs and what that means for Chinese companies.
How much damage, let's say the worst happens, 25% tariffs at the end of the year, sales taxes on $267 billion of whatever number of imports. What do they think that's going to do to the U.S. economy and to the global economy? How much damage? Right now, people sort of poo-poo it, but
well, we're starting to see it. It's interesting if you think about where we are on the calendar year. Most calendar companies are just starting their planning processes for 2019. If you're a multinational that's pushing a lot of goods through a global supply chain, you're really scratching your head as to what to do. Pricing, what does that do to margins and all those things? And that got reflected in company optimism.
So is this uncertainty affecting investment decisions?
Yes, yes. In other words, and just to that point, there's a huge bias this quarter to invest organically as opposed to inorganically through M&A. Partly due to that uncertainty. Secondly, 71% of the CFOs said that U.S. equity markets were overvalued. Now, that was basically a month ago. S&P 500's moved up 3% since then.
So if you think the market is overvalued, would that impact share buybacks? Would you take that money and invest it in a different way?
Well, that's the interesting thing with this 7.4% forecasted dividend growth.
Right.
That really comes from a few things. Number one, obviously, company performance has been very strong. They're forecasting 8.1% basically earnings growth over the next 12 months. So a lot of cash accumulation from that. Second, tax reform in 2 elements. Number one, the lower rate. And number 2, for multinationals, having the ability to repatriate cash in an efficient way. And number 3, companies and CFOs are a lot more sensitive today about their capital allocation methodologies because of activism. You have to be. And so that's really fueling that dividend growth over the next year.
Activism, how?
Well, I want to
spell that out.
Yeah.
Excuse me.
Well, I mean,
it's fine. Go ahead, Steve.
Okay. He said activism. Spell that out.
Yeah. So the shareholder activism and basically investors expecting a lot more in terms of overall returns. We see this in the news every day. You really got to stay on your toes to be able to not be a target of activists. And a company that has a lot of cash sitting on the balance sheet that doesn't explain what they're going to do with it, they become a target.
Mike, real quick.
So just real quick, so ultimately the results of this study are that the economy is good, but they don't see it staying great for that long.
Yeah, the North American economy is very strong. When we asked what does it look like a year from now, less than half of the CFOs said the U.S. economy will be better 1 year from now.
But they're kind of the paid worrywarts, aren't they, CFOs in a company? Aren't they paid? They're the ones who are paid to worry, while the CEOs think kind of big picture, 10 years down the road.
Yeah, well, I get to spend a lot of time with CFOs. I think they're pretty good people.
I didn't say worrywarts were bad people. Yeah. Why do you think I bite my fingernails and I'm almost 50? Sandy, thank you. It was good to see you so much. Great insight in this survey. Sandy Cockrell from Deloitte.